This is NextEra on the monthly chart. This is the pandemic lows, and this is the November lows. Not quite sure what happened, but the breakdown occurred when we saw a close below this support level at $68. Now, staying on the monthly chart, current month, you have a sell wick. In December, you also have a sell wick, so that is selling pressure, which implies there's more downside risk. However, if you look below price, you have a doji candle, and you definitely have some buying pressure, as denoted by this October candle wick. Before we continue with analysis, let's try to get some fundamentals and see if they align with the technicals. So, NextEra Energy had a rough Wednesday. Again, it seems to face challenges on multiple fronts. Now, NextEra, I believe, is a utility company that uses green energy to supply power to their customers. All right, so not only is a cold spell hitting the U.S., but you also have interest rates are up, and fuel costs have been on the rise as well. So because NextEra is a utility company, in general, utility companies have a lot of debt, and when interest rates go up, well, that cost of debt also increases. So NextEra Energy had a rough 2023 in part because rising interest rates, as we just discussed, began to put pressure on the company's cash flow and balance sheet. Not only does the parent utility have a huge debt burden, subsidiary NextEra Energy Partners, which buys and holds renewable energy projects, has debt concerns as well. That impacted the stock today because the 10-year government yields rose 4 basis points in the U.S. and 8 basis points in Canada today, and are up 19 basis points and 32 basis points respectively over the past month. Higher rates will increase costs and put pressure on the bottom line long term. So I follow the 10-year note, and typically what you'll see is as the yields increase, that means that interest rates are increasing. And I follow this because this gives me an idea of where the U.S. indices are heading next. A cold spell hitting the U.S. is also a concern because it pushed natural gas prices higher and could cause damage to the electrical grid that would increase capital and operating costs for NextEra Energy. Shares are down 30% over the past year, but this is still a giant utility with steady cash flow and a great renewable energy business. The dividend yield of 3.2% isn't the highest in the industry, but given the company's long history of growth and growing dividend, I think there is still more of a buying opportunity than a reason to panic. So the play is we need to see interest rates continuing to go down. If that occurs, then NextEra Energy is going to recover. So we go to the weekly chart. We see that the lows were in October, and then we had a steady increase. And I think these lows were also marked with a top in the 10-year yield when it hit a peak of roughly 5%, sitting around 4% right now. And we did have some economic news in the U.S. which was favorable to a strong dollar, which is why we see increased sell-off in the U.S. markets. Favorable to the dollar means interest rates may go up, which means, again, anybody holding debt, that cost is going to increase. So we see this week we have a sell-off. And if you look at just the moving averages, they're still pointing down, although the 13 weekly simple moving average is trying to cross over the 26 simple weekly moving average. So what's the play here? Well, price is making higher highs and high lows. Thus, Price is at $56.83. This level at $54 must hold. Not only is it a support resistance band, but a break of the $54 level means that the uptrend has been invalidated. So what's the next move? Let's see if price can bounce off that $54 level in the coming weeks and then make another higher high, at least to get back to the origin of the strong move down. Thanks for watching. Subscribe. Please like the video.